Hello, guys. Thanks for joining. I'm here to answer the most famous question. How do I consistently make profit? Are you tired of taking losses? Well, you're in the right place. First thing you need to do is like and subscribe to the channel because we're going to get right into it. So let's get started. This is what I look for. We're going to call it structure, okay? This is one of the most key strategies you can use in trading that's going to help you um, just be more profitable, more consistent, and more steady. So let's get right into it. Structure. We're going to say we have a bull structure that's creating higher highs and lower lows, okay? Let's change the color first so we can actually see what we're doing. Cool. So let's say our structure starts to create higher highs, right? Lower lows. Come up. Actually, the last one is probably a little too deep. Start it again. Just try to get a good bull structure on what you usually see. Then we're going to go to a real chart to show you what happens. Okay, so this is a structure, right? High, got your high. Each high is getting higher. This one is almost equal, but it's like liquidity. Two equal highs here, and then it goes up. Okay, this is structure. So this is key. This is how I draw a trend line. Okay, the trend line, we would start. Let me tell you for one, most people start their trend at the low. Okay, they draw their trend to the low and they try to connect these points. Okay, that's the usual way. Me, and then you wait for price to come back here to make a decision, right? Typically, you wait for price to come here and think it's going to go back up to follow that structure, right? Well, me, I don't draw my trend line like this. I believe that this is incorrect, and this is what they want you to do to catch this buy, and then it just sells off because you probably can't see that it actually made the break. And we're going to talk about the break in a second, but let's talk about the trend. So we're going to start our trend line from not the low, but the second low that gave us a higher high. Then we're going to connect those two. And I'm going to show you the difference in what you see. But we're going to connect these two. Okay, you got your low, second low, connected to this low that gave you a higher high. Now watch the difference in what you see and how you have to wait for the price. If I connect this two to this one, okay? You see how far down of a difference that is? And people wonder why sometimes the price will get near their trend and take off without actually touching the trend. Well, the problem is, or they'll touch the trend, it won't hold. It may make a move like this. It'll hit their trend. It will not hold. And they think it's going to keep going up and it actually hit the correction trend to come back down. All right. That's that's typical right there. That's pretty typical. So it's very important to have the right trend line. So we got the right trend line starting at our second low, connecting it to the next low that gave us the high. Not just the low. This low has to stick out to give us a high. Now let's talk about the break. Let's talk about the break. So we're going to use the same structure. Okay, we're using the same exact structure. Now, what happens when we come here and start to move up? We're just going to stop right there. All right, this is called the break. Once you take your second low and you connect it to your other low that gave you the high. Remember, this low has to give you a high, a higher high. We would call that the break. Okay. Break in this structure here. So this is how we would look for the trade to turn around. We think that the bullish structure is over and we would turn around. We would use our Fibonacci's retracement. Now, the thing about the Fibonacci retracement, I'm going to show you what it looks like. If the trend's going up like this and you expect it to come down, you would draw your Fibonacci retracement from the top all the way down. Okay, so it will look like this, all the way down. Now, before we draw it, I want to give you some key levels that you really need. These are institutional levels, and you have to change these on TradingView. You have to change them. You don't need, and take notes of this. You got to screenshot it, pause the video or whatever, but you need the screen right here for your Fibonacci's. Obviously, you got your 0. You do not need 32, 38%. Okay. We're going to keep 62%. And right across, we're going to change this to 70%. All right, 70. And this is called our golden entry. This is where we want to enter the market, 62 to 70. And what these numbers represent is a discount on the current price. So if a price is let's say $100, you're waiting for a 70% discount before you actually make the trade. So if you want to buy it, you're waiting for the price to get to $30, which will hit this golden entry. Okay, so make sure you copy these. 79% is pretty much too much of a discount. You don't want to get something that's too cheap. And I'm going to explain that in a minute. So this is what we're looking at, these levels. So I'm going to show you how they work on this chart. Once you determine you have your break, okay, you will draw your Fibonacci from the top to where the actual price broke. Then you would patiently wait for it to come. I eyed it so good that I just noticed so well. Look, it goes back to the golden entry, okay? And you want to take the trade there. So if you're looking and you see that it broke bullish structure and now it's turning bear here, you want to wait until it gets back into your discount, 62 to 70% discount, and you want to take the trade back. Where do you take it back to? Where the trend line started. Back to where the correction started. This is where you take the trade. So your trade would look like this. You would enter the market here. Your stop loss would be above this high, and you would take it back to here, which is the previous second low. This is what started the trend. So we're going to look at this in real time. Now, I did highlight something in this chart. I got to go look for it. We can look for it together. I'm not going to skim the video. This is raw material. No editing. We just going to show you how this works. Okay. So we're going to go to the 1 hour on this chart. And I'm going to show you what happened here. So let's typically follow our structure. We got our high, low, high, low, high. Let's stop there. Okay, you got your high, low, higher high, low, and your higher high, right? Now, I drew this from this because this is the low. Here's your low right here. Okay, so I went to the second low to start my trend. This is where I started. Second low. So what happens when the trend breaks here? See how it actually breaks, the price comes through and break? We take our Fibonacci to the top right here, and we'll draw right where It broke. See the correction starting to come back? And look what happened. We'll just swing it out. What happens next? The price breaks, returns to our golden entry perfectly to come back down. Now, where do we say the price goes to? The original trend line where it started. Oh, it is. It's taking place. It's just white. Hold on, guys. They're giving me a white bar here. Not sure how I can change it. I can't find it. Oh, there it is. All right, cool. There we go. Well, it came to this what's just called an institutional order candle, fair value gap. This is where the price came back to. Okay, where the trend started. That's the trade you take. So you wait for the break of this correction line, and then you wait for it to come back, which is called a retracement, and then you take it on your OTE, your optimum trade entry. This is where you take your trade down. Okay. Let's look at a bull one just right now, real quick, while I'm with you before we end this video. I'm going to show you how you can detect it on the bull trend too. So you see how you have your high right here. So we're going to start with the second high. Same exact thing, even though it's a deeper dip. We're going to start with the second high. And we're going to follow this down. And I always look for the lows. You see how this low? I want to see what high gave me that low, which is right here. And I'll connect this point to this point, and I'll drag it all the way down. Okay? Drag it all the way down. Now I want you to see this because I'm doing it right with you. It's not pre-done already. If I take my Fibonacci, you see how it broke right here? I take my Fibonacci to the bottom. This time I'm going to draw it up because the price broke upwards. So I'll take it to the bottom and I'll draw it upwards. And I'll zoom in to show you what happened here. Check it out. What did price do? Broke our correction trend, came back in our golden entry to go all the way back up. Do you think this price ever went back up to this trend? Let's mark it and see. But that's actually how you would take that bull trade. You go back here. Look, right there, it almost did. And that's pretty much a good area. I'll actually mark this entire candle and fair value gap. So I just wouldn't mark the high. I will mark this entire fair value gap. You see this gap right here? You guys, we could do a video on fair value gaps and soon. But this is actually a good spot to take this trade. I'll stretch this out so you can see it. Take this negative. This is how you stretch out the symbols too real quick. You double click it, go to coordinates. You go to the second bar right here. You type in any number and it'll stretch this line out for you. Okay. You can do that with anything. So if we scroll back over to the chart, we can see that price connected to the fair value gap perfectly where the trend came. Okay. So guys, if you take this system and you learn it, rewatch this video over and over again until you understand it, you will have a lot less losses, more accurate trades, and you'll develop more patience and discipline. Okay. So if you like what you saw and you think you can get more knowledge from this, make sure you subscribe, like, and leave a comment so we can actually keep updated, talk to you, and walk you through some things. Thank you for joining Trader Demon.